You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means we are back once again. Time to roll out the Advisor's Option, the program here on the network for you, the busy financial advisor or asset manager. We get it. Your phone's probably ringing off the hook these days. You don't have time to keep track of these crazy options markets. Maybe you also want to learn a thing or two about what these options things are, how you can utilize them in your clients' portfolios. Well, lucky for you, the Advisor's Option has you covered. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are mainlining these days. Hope you enjoyed your double dose of the option block and the crypto rundown yesterday. Another double dose coming at you today, at least if you're on the pro side. We'll have the Advisor's Option followed a little bit later by another great pro Q&A session coming your way. All sorts of great topics we discuss, and questions are answered in those. Of course, you can participate in those. Just head on over to theoptionsinsider.com/pro. Get your name in the hat for the pro Q&As. You get options oddities. You get the giveaways. You get, of course, live access to everything we do. For a lot of you advisors and asset managers out there, I get it. It's hard to ask the guy on the desk next to you, perhaps, how do these covered call things work? But you know what? That's what our pro Q&A sessions are all about. Check them out, theoptionsinsider.com/pro. Should be a fun one coming up a little bit later today. Should be a fun show today as well. So let's go around the horn, see who's joining me on the old Advisor's Option program today. First, let's dial the machine all the way out, not quite to the dark and stormy shores of Maine, but one state adjacent. There is a shoreline of New Hampshire. Not many people know that, but there is a little secret, I think 5 or 9 miles of coastline there in New Hampshire. And our co-host here, our buddy, Mr. Matt Amberson from ORATS, he owns it all. He runs all the coastline there on the shores of New Hampshire when he's not moonlighting over there at ORATS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to the show. How go things on the secret shoreline of New Hampshire, sir?
It's beautiful. We've had the best surf they've ever had out here, so it's a lot of fun to go down and watch them. And I don't surf when it gets this cold, so I'll just watch. But it's beautiful coastline. Not up by the Rock Lobster, although I did drive by his abode once, and it's beautiful up there, but it's beautiful here. So great to be here, Mark.
Lucky he didn't shoot you. Anyone goes into that compound, you get the double barrels. He's not very conducive to strangers setting foot on his land. That's why he lives out there in the hinterlands out there. And also joining us on the old program today, I'm pleased to welcome on a newcomer to the program and indeed to the network. He is John STEC, the Director of Digital Asset Solutions at Global X ETFs. John, welcome to the Advisors Option Program.
Great to be here, Mark. Matt, how are you doing?
Yeah, doing great. Nice to meet you, John. I'm excited to learn all about what you're doing. And this is going to be great to get into this, Mark.
Well, John, before we kick off the show proper, since this is your first time joining us here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of finance and indeed derivatives, and indeed what it is you do day to day as the Director of Digital Asset Solutions over there at Global X.
Yeah, sure. Quick commercial on me. Been in the ETF business primarily for over 15 years. And joined Global X back in 2016 as a regional director covering the Pacific Northwest, based out of San Francisco, which led me into the discovery of what we'll talk about primarily today, which is the digital asset and crypto space. So I took a short pause away from Global X, got educated on the crypto space at a crypto startup out of San Francisco, and boomerang back just over a year ago to help spearhead their efforts on all things digital and crypto. So helping education for advisors, helping bring new products and solutions, and really ramping up our efforts in the crypto and digital asset space.
Well, you have some good timing there. I'm not sure if you noticed there, John, but a lot going on in the crypto and digital asset space. So a perfect timing for you to join us as we kick things off with the P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right, listeners, let's dive into it with the P&L statement, the portion of the show that was born of the pandemic because so many just unprecedented things were unfolding between episodes of the show. We spent a lot of time at the top of the show just explaining what the heck just happened in the world of the markets or volatility or options or sometimes all of the above. So a lot to unpack. As we're coming into the start of this show, listeners, we are recording this towards the tail end of November here, and we have been on a fairly protracted bull run out there in the broad markets ever since Powell and company got together and seemed to indicate that they were maybe taking their foot off the brake a little bit. That was enough to send the market roaring into the stratosphere. And as a result, we've seen volatility come plummeting down the other way. VIX cash hanging out in a 12 handle not too long ago, still hanging out at about a 12 handle, right around 1270 right now as we're kicking off the show, listeners. You know, if you've been listening to the network for a while, whenever I see a 12 handle pop up on my screen in VIX, I get a wee bit nervous because I have PTSD from the year 2017 where VIX hit a 12 and then immediately just kept plummeting all the way down. That was the beginning of the end in terms of volatility. We got down into the single digits, and of course, volume followed right along with it. And it was a dark period for those of us who were in the options world back in 2017. So no one wants a return to those dark days, but still, I can't help but have a little bit of PTSD triggered whenever I see a 12 handle in VIX. But a lot going on. John, as our guest, we will start with you. If you have any thoughts on what we've been seeing out there from a broad market and a broad volatility perspective, by all means have at it. And then, of course, from your perspective and from your neck of the woods, a lot's been going on in the world of crypto as well. So if you have any thoughts there as well, feel free to share them with us.
Yeah, from my seat, I think I'm seeing exactly what you're seeing from a macro environment, right? A lot of eyes on Fed, a lot of eyes moving towards the year end here. A lot of expectations of what's going to come next year with any rate hikes and or cuts at this point. And then more granularly, what I focus on specifically in the crypto space, we're also seeing that bull run, if you will, right? And some chalk that up to, risk coming back on the table, or others looking to diversify away from some of their current positions. And as we look to Bitcoin year to date, up 131% and still moving strong into the year end. That's a far cry of what we saw just over a year ago with multiple collapses of the FTXs of the world. And, to your points earlier, a little of the PTSD still rings true here because crypto tends to be a volatile market, and a 20% up can be followed by a 40% down. So the good news is we're tracking strong going into year end, and still think we've got some strong fundamentals underneath us.
I have to ask you the question of the day. We'll get more into digital assets in our next segment, but I have to ask you, I'm legally obligated, John. Everyone and their mother and their grandmother seemingly a Twitter, a buzz, a light with enthusiasm for the prospect of this new impending spot Bitcoin ETF being approved any day now. That's kind of been the rising tide that has been lifting all the crypto boats out there for the better part of the last month. What are your thoughts on that? Are you on board the ETF will be approved this year, or maybe sometime in the near future train, John?
Yeah. So consensus and what you're alluding to here is there's multiple ETF issuers filed for spot Bitcoin ETF. The joke, in the industry over the last handful of years is, on our gravestone, it would read not if, but when. Now, the good news is I think that's getting closer to a reality, right? And the final deadline is what most people are looking at for the ARC21 shares Bitcoin ETF filing, which is January 10th. Consensus, again, believes that the SEC isn't going to make a kingmaker and approve just one. They will probably batch approve a handful of these issuers so that all of them have a fair shot of raising assets. There is some chatter, to your point, on Twitter that we may see something earlier. So, at this point, potentially still speculation. I think the consensus still holds that we may spill into next year, and that January 10th final deadline date is what's circled on most people's calendars.
That's true. They did just approve one. It would be pretty much giving the keys of the kingdom to one issuer. Look what happened with Bitto. They only beat the others out the gate by not a long margin, but it was enough to steal most of the volume, certainly most of the options volume in the crypto ETF space and Bitcoin ETF space right now. Well, intriguing stuff. We did put this question to our audience last week. Of course, you folks out there are the ultimate arbiters of everything at the end of the day, listeners. And we thought it was a fun, shortened holiday week. Let's have a fun little question of the week. So last week's question of the week was quite simply, will the new spot Bitcoin ETF be approved this year? Just yes or just no. No silly third answer this week. And it came down pretty close, but at the end of the day, you folks leaned towards the negative. 56% of you saying no, 44% of you saying yes. This year, that's that window obviously rapidly closing, and towards the latter half of December, not a lot gets done in the wheels of bureaucracy. So you're really talking about a couple of weeks to get that done. So it sounds like our audience leaning towards the negative on that. Let's go out now to the secret shoreline of New Hampshire, where we are joined once again by Mr. Matt. Mr. Matt, sir, obviously a lot to unpack. Your long-standing 3,000 before 5,000. Powell put a little bit of a kibosh in that, at least for now. We can put that flash poll out again during the show if you want, see if our audience is still down for that. If you want another drubbing, we're happy to do that for you. And then B, what are your thoughts on what we're seeing from a vol perspective? Are you as nervous as I am seeing a 12 handle in VIX? And C, what are your thoughts on all this crypto brouhaha, sir? A lot to unpack.
Yeah, love the crypto, of course. I was an early adopter and on a few of your crypto shows, and I love doing the Bitto collar against my Bitcoin that I have off exchange. So it's been great. And the markets, though, wow. I mean, we were looking good on my prediction just getting into November, and then we just rallied so freaking hard. I mean, like gapping up, three big gaps. So it rarely happens in the markets, but that's what's been happening. Implied volatility, as you've mentioned, fell out of bed. We look at a lot of indicators, so don't worry about me because I try to trust my indicators, and they've been pretty bullish for a while. It's starting to bottom out though, so I'm starting to get more neutral on the market. I was bullish for a while. Of course, I've made the 3,000 before 5,000. I mean that's a tough call to make, but I think that there's a lot of weakness in the market, fundamentals. So we'll see if that ever happens. But as far as the market goes, one of the things we look at is market implied versus the components. So we look at the S&P 500 weighted average. That has come down, and that's bullish. But now it's starting to get little green shoots of bearishness, or at least neutralness. So I'm not as positive. Contango starting to come down a little bit today. The put call slope skew is still kind of muted. So I mean, I think it's a market that's been very resilient. Obviously, a lot of cash sloshing around out there. The Fed does not want the market to go down, and it just seems like they want to support it. And then when it gets too high, they talk a little hawkishly. So who knows? But that's my state of the market now, Mark.
I told you I'm going to get to $49.99 before it all turns to the dark side, and you're going to look like a genius at the end of the day. We did just put it out to our audience for a quick flash poll. So far, 100% disagree with you, Mr. Matt, but we'll see. We'll see. The poll is young. We still have time for Otto to get in there and game the system out there. As we keep on rolling, listeners, it is time to explore the tricks of the trade.
And now it's time for practical tips on how to implement options into your practice. It's time to learn the tricks of the trade.
Welcome to the Tricks of the Trade segment, the portion of the show where we typically explore how you can utilize some very specific elements of options in your clients' portfolios. Today, we're going to expand that purview a little bit and also explore how you can utilize perhaps some digital assets in your portfolios. Those requests starting to come fast and furious again. We have our whole show, the Crypto Rundown, every Monday. You can check it out on the network wherever you listen to this. Listeners, just make sure you're listening and subscribed indeed to the full network. And I've often joked on that show, really only half joked, that people care about Bitcoin when it's north of 30K. When it's below 30K, institutions, funds, individual investors, they'll find something else to play with. When it starts getting north of 30K, they start to get their antennae up. They start to get interested. We start to get deluged with questions on programs like this and others on the network about what can they do for exposure in that space in their securities account, preferably optionable. And so we're going to explore some of that fun out there today. John, a lot to unpack, but let's get started with what you folks are bringing to the table over there at Global X ETFs. Let's say I'm an advisor, and we have had many on this show in the past who've talked about different ways they could provide their clients exposure. A lot of them still lean towards the grayscale out there for a variety of reasons. For a long time, it was the only approved product that a lot of them could use and custody in their clients' accounts. But you guys are bringing some new options, pun intended, to the table. What are you guys offering on the digital side for advisors these days?
Yeah, Mark, great segment into what we're doing and what we're seeing. I may even back up, though, a little bit just to kind of touch on what you mentioned there with grayscale, because the evolution of solutions continues to happen, right? And we touched on the Bitcoin spot ETF as what I would commonly refer to as the IPO for Bitcoin, right? If 7 years ago, the only option investors had were maybe a hedge fund, a venture fund, which really limited those who can gain access to that. In the late teens, we saw private funds, which opened the door to more investors, but still had an accreditation hurdle. So you were still limited on who can access that, those products. And then what GBTC did, or what Grayscale did, was allowed for that over-the-counter vehicle, that tradable vehicle, which can be placed into a brokerage account. A lot easier to press a button and just get an allocation for yourself or clients. And what we learned and saw, obviously, a ton of asset inflow, but what most people learned was, because it was traded in the secondary, we saw a premium and discount. And originally, the premium was significant as far as above the NAV. And then more recently, in the rearview mirror, people saw a significant discount. A lot of people are trading, particularly GBTC, because they believe that as they win lawsuits against the SEC, we'll be able to convert that product into an ETF, and it will convert at NAV, right? So if you're trading at a 12% discount and that converts at NAV, that's a potential arbitrage opportunity. So that's why we've seen the OTC products discounts decrease more recently as we move closer to that Bitcoin spot ETF. Now, there's also a difference between how do we want to play and get exposure to the space. If you want an ETF wrapper, which is the preferred vehicle for financial advisors in most cases, there was no spot or Bitcoin allocation, right? So you had to indirectly invest. So what you saw is a slew of product that came out that gave you exposure to what we'll call the picks and shovels of the digital asset space. So let's invest in the MicroStrategies that's holding Bitcoin on their balance sheet. Let's invest in the Coinbase that's allowing me to buy and sell crypto assets. Let's invest in the miners that are mining Bitcoin and then earning revenue, based on their block rewards. And so you can get higher correlations and still get exposure to that space as the industry grows, but you're not holding Bitcoin or other crypto tokens specifically. And then obviously in your world, where we saw the futures markets kind of expand and we got ETFs that allowed access to that space, again, not direct token exposure, more indirect exposure, but at least highly correlated enough to where you feel like you're participating with the digital asset space. And so what happens if the advisors want the direct token exposure, not taking a premium at a discount or not taking a futures lens, there's SMAs, and those really started to come on more recently in the last couple of years. And these SMAs allow you to get direct token exposure, modify, your indexes, have some tax benefits around trading, and really seeing some of the advisors gravitate towards the separately managed account space. And so overall, for Global X, we want to allow advisors to get access that best fits their business model. And so at this point, Global X has private offerings for Bitcoin and or Ethereum, again, for accredited investors. We've launched a handful of separately managed accounts for those advisors that want to directly get token exposure. And then we have some ETFs in the space that have exposure to the futures and or the equities that are participating in digital assets. And so I always tell advisors, I'm agnostic on how you want to get exposure. We've got product and solution in each category. And so whichever best fits your practice, that's okay by me.
Yeah, it has been fascinating to watch the just evolution of that discount out there in Grayscale Bitcoin. I used to have people come on our shows who were buying it, as you mentioned, just because it was trading back in July, nearly 50% discount to Bitcoin. So they were just betting on that discount going away. And in that sense, they were right. It's down to about almost 9% now. So articles just coming up this morning. Is it going to flip to a premium soon? I guess if this anticipation over these ETFs continues, that could potentially happen. So intriguing things out there. Let's get into specifically what you folks are offering. You guys have a Global X Bitcoin Trend ETF, as well as the analog out there in Ether, the Global X Ether Trend. Tell us a little bit about what these are and what you guys are trying to do. What is the trend you are trying to follow with these?
Yeah, great. So quick disclaimer, these products that were launched are actually SMAs. They're not ETFs. So I just want to make sure that's crystal clear. Now, we do have a filing in on the Bitcoin version of this. So we'll anticipate something in the future around that. But as it stands today, for folks that wanted to gain exposure to these strategies, they would be available in an SMA format on the OnRamp Invest platform, which is a crypto TAMP, if you will. And so at a high level, The great thing about this is this strategy was actually put together by the folks over at CoinDesk Indices, and they've been running this strategy for a handful of years, and really have shown the ability to reduce volatility and or risk while still participating and potentially even outperforming the spot products over time. And so what does that actually mean, right? And so what they were able to do is look at different short and long-term EMAs. And when I say EMAs, I'm referring to exponential moving averages, which is different than what most people are familiar with on the simple moving averages. And the reason they look at the EMAs is because they are putting a little bit more emphasis on recent data, right? The more recent data is probably more impactful to your investment strategy than something that happened 3, 6, 9, or even 10 months ago. And so what they're doing is they are putting together 4 different components from a moving average that allows you to determine, are we in a bullish or bearish situation? And the more bullish, let's say 4 of those signals indicate a positive, a green situation, you're going to be invested 100% into Bitcoin. And the same would hold true if you invest in the Ethereum, it would be 100% invested in the Ethereum token. Now, let's say we start to see some movement on a couple of those, or even just one of those signals into a negative situation, we start to scale back our exposure. So what we can do is be 100% invested, 75% invested, 50%, 25%, or even fully out of Bitcoin or Ethereum. And as we peel off our exposure and move potentially more into a bearish situation, we start building a cash position. So again, we want to participate in up markets. And as we start to see some signaling as moving to a downward trend, let's sidestep that. Let's move to a cash and let's wait into the next uptrend and start to reallocate assets into 100% position. So the strategy, again, created by CoinDesk Indices, shows really fantastic returns. And we wanted to bring and partner with them something to the market to allow advisors in a long-term situation to invest in Bitcoin and or Ethereum while reducing some of that volatility or risk.
So in a nutshell, this listeners is going to have spot in your account. Again, these are SMAs, these are not ETFs. So I'm assuming from that perspective there, John, there's going to be some accreditation level, 100 grand, whatever it is, to enter into these SMAs. Is that correct?
Great talking point, Mark. So actually with the SMAs, we lose the accreditation hurdle. And the minimums get drastically reduced. So we see minimums as low as $10,000 without an accreditation. And again, an on-ramp invest where these products live and breathe on their platform. They also have the capability to do retirement accounts and some tax management strategies, which are really beneficial to the end client.
So that's interesting, because that opens the door to many more clients than maybe who would traditionally be able to participate in your traditional SMAs, which are usually cut off somewhere around that 100,000 barrier. It sounds like for these products here, John, you're essentially vacillating between spot Bitcoin, spot ETH, and then some various degree of allocation to cash. So there's no, let's say, listed futures over there from CME or options or anything like that. Straight spot and then straight cash.
Exactly. Yep.
So interesting stuff out there, listeners, which, again, if you're looking for, I know a lot of advisors have come on here and have talked about different ways to approach the digital asset space. If you're maybe a little bit spooked by the grayscale, I can't blame you. Any product that's trading at 50% discount to its value not too long ago, it certainly gives me pause. It probably would give you pause as well to put client money in there. Maybe you're not a huge fan of approaches like BITO, which have very convoluted dividend distributions associated with them and everything else like that. And the tracking may or may not be one-to-one. There are a lot of pros and cons with a lot of different products out there. Then maybe this is an alternative that you may want to consider. John, you've obviously been in this space for a while. We talked about the grayscale approach. What are your thoughts on some of the other approaches we've seen out there, for example, like a BIDO, which, of course, is not a spot ETF. It's using the futures listed on CME. And we've seen various issues with it. It's intriguing. It performs fairly well. But then again, you also have to really capture that enormous dividend on it to really make it perform well. What are your thoughts on products like that?
Yeah, Mark, I think you hit the nail on the head there. Each product up into this point, and I think this is why the spot product has such a lot of attention focused on it, is there's pros and cons to each approach, right? And we've touched on a little bit with the private funds and the accreditation. SMAs, you're maybe signing up on a third-party platform. Futures, ETFs, you introduce, potential contango or backwardation or roll costs. And so to your point, you're not getting that exact exposure. I think ultimately my message to advisors as they're looking at these products and figuring out what best fits their end client is really making sure that the expectations are set and the understanding of those pros and cons. And that way they can navigate what the best approach is. Because the last thing, to your point, is you want to buy something like an over-the-counter product that moves from a par value down to a 50% discount. That's a hard conversation to have, even while Bitcoin is up, right? So why is it going down if Bitcoin is moving up, right? That's a tough conversation to have. So I love the futures product. I love that they came to the market and gave investors a way to invest in crypto. And do that at a high correlation, right? Maybe not directly invested in it, but giving them the ability to get the exposure. Because again, what many people are having a hard time wrapping their head around today as they start to get introduced to the crypto universe is if you try to do this on your own, you take on a lot of the issues around self-custody, right? And protecting your seed phrases, and it becomes a very complicated process. So I think that BIDO or futures ETFs or indirect ETFs are a great way to get that exposure if you're trying to invest in a brokerage type situation or use tickers or equities.
You mentioned custody. That's obviously the other big hurdle a lot of advisors and their clients just don't really want to deal with. They have to either self-custody and go through all the rigmarole of that and maybe get into cold storage and, oh, no, I forgot my password, and you're the guy digging through the landfill to try to find your $10 million worth of Bitcoin or whatever the case might be. So the notion of custody is an issue that crops up in crypto. You don't really see that in most other asset classes. No one says, I'm not going to buy shares of Apple because what am I going to do with the shares? Who's going to custody them? It's not an issue, but in crypto it is. Obviously, these are SMAs, so it's a little bit different, but also you have to obviously be in there actively managing them. So you're allocating to spot, then you're allocating back and forth to cash. So how do you guys tackle the whole custody issue?
Yeah, great question, Mark. And again, that's one of the biggest hurdles I've seen over the last handful of years from advisors or even investors or folks around the Thanksgiving table in my own family is the custody solutions, right? And you brought a great point. If I buy a security, I feel very confident that is going to be held somewhere and the proof of ownership exists, right? And you alluded to the best one where we've seen the guy literally walking through landfills trying to find his thumb drive because he has, potentially hundreds of millions of dollars worth of Bitcoin held on those. And so what the SMA solution to your question allows for is the professional management of these indexes and products from a Global X institution. And then that partnership with OnRamp Invest allows for the trading and execution. And then the custody is actually held at Gemini. And so we have a lot of institutional players making sure that the trading, the rebalancing, the custody, the tax reporting, all of that your advisors are familiar with in their traditional book of business is being adhered to in the crypto universe. And again, that wasn't an easy step. That took a lot of years to get to a point where it was pretty clean. I think advisors are comfortable with it once they make that educational jump.
Well, there you go, listeners. A lot to check out. Speaking of education, you guys over there at OnRamp seem like you have a pretty decent educational offering as well. So if some advisors are maybe still a little bit skittish or their clients are skittish, you guys have some content there to help ease their transition, John.
Yeah, Mark, I might coin the phrase, and what I've seen, and for the listeners who haven't jumped into this educational journey just yet, I wouldn't feel ashamed because what I would say is we're at a 15-15-70. And what do I mean by that? 15% of the advisors aren't going to want to ever invest. You can chalk that up to old dog doesn't want to learn new tricks. They believe it's fool's gold, and they'll never take the time to get an understanding, and that's okay. They're going to do what they do well, and they're not going to invest in crypto. The other 15% have invested to some degree. Matt alluded to holding some of these crypto personally. Some other advisors may have bought GBTC or some private funds or SMAs, and they've got some allocation. And the good news is, most of those who had bought in a little early haven't really sold out of it. They've held on to it. And then we're left with that 70%. And this is what I think where most people live is they're starting to ramp up the education. They understand that we're in an environment where they can no longer just dismiss it because it's not going away. The tickers are on CNBC and Fox Business. We're seeing the SEC obviously looking to potentially approve a spot Bitcoin ETF. We've seen companies adopt this. We've seen countries, Argentinian presidents say they're going to make Bitcoin as legal tender. We already saw El Salvador. So we're starting to see a much larger adoption. And so whether advisors invest or not, they need to know the reasons why for or why not. And to your point, and thanks for teeing us up, yes, at Global X, we've got a team of digital asset researchers that exclusively just look at crypto all day, every day. They put out content from white papers to blog posts to webinars, and a lot of that is posted on our website. And of course, we always make ourselves available to advisors if they have questions in real time, because as you alluded to earlier on the call, there's never a dull moment in crypto. And it seems like every day a new major headline is breaking, and we're here to support and do the hard work for them.
Well, there you go, listeners out there. So if you or your clients are starting to get a little bit more crypto curious, and I'm guessing just from the valuation levels out there, that's probably happening. You're probably starting to get more phone calls now than perhaps you were a few months ago. But tell me more about this Bitcoin thing, or how can I get back into that? So if you are looking for another alternative out there in a interesting sea of alternatives right now, then perhaps these new SMAs coming out from Global X ETFs are worth your consideration, as it's time for us to keep on rolling and explore what's going on in the world of earnings volatility.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everyone, welcome to the Earnings Volatility Report. And Mr. Matt, all that time we were talking about crypto, were you polishing up the shotgun so you can go guard all of your cold storage assets after the show, sir?
What John was saying is correct. It's watching your keys, and I feel for the guys walking through the garbage dump looking for his thumb drive. Oh my God! But yeah, I mean, you have to watch it. And there's a lot to be said about having your own keys and figuring that out. And there are hardware wallets, Ledger, Trezor, and all that. So, I'm having fun with my crypto, and I'm having fun with BITO as a hedge. So it's, let's just hope it continues, Mark.
You've been harvesting that juicy BITO dividend. I know I've captured a few of those of late. It's an intriguing game to be playing out there. Let's just put it that way. All right, let's keep on rolling. Speaking of intriguing games, listeners, we are back in it again. The game is afoot because earnings season is upon us. Just because the holidays just rolled off the calendar doesn't mean we are done with earnings, not by a long shot. Even just this week, listeners, as we're recording, we have Intuit popping off after the bell today. We have Snowflake. They were a hot one not too long ago. Are they still a hot one? I guess we'll find out. We have Salesforce later this week, Foot Locker. They had some interesting paper in them not too long ago. We talked about them on the Odd Block and Options Oddity. So interesting games being played, and a lot of these names out there. Ulta after the bell on Thursday. Kroger. So a lot of names in a variety of industries still popping off. Matt, I've noticed some interesting trends, and I'm curious if you agree or disagree with me. One of the first trends I've noticed, not just in the season has been outperforming. We're at about 113% or so coming into the start of the show, and our long-term average is right around 100%, right around par. But I've also noticed a lot of individual names seem to be pricing in a heck of a lot more juice this cycle than in the past. And for the most part, they seem to be delivering on that. Have you come away with that impression as well?
Yeah, definitely. What we see is when the market has a lot of juice in it, i.e. when VIX is high, what we imply for an earnings move, there's a lot of premium in there already, and then there's some extra juice. But now when volatility is lower, you're seeing some of these implied moves that are greater than you've seen. So yeah, we've definitely seen that. You should check out our dashboard, Mark. We got a new graphic where you could click on the day and see the stocks that are about to report, and we have so much information about historical moves versus what was implied, and what's implied next versus what the average historical move is. For example, we like Dollar Tree to move a lot. We may or may not have a position in that. And we've had a good season of our forecasted earnings moves, working pretty well. So we're definitely thinking that earnings matters again. We went through some tough quarters during COVID where the stocks weren't moving, but now, as you say, we're 13% to the better for option holders, and that hasn't been true in a long time for this earnings season. So that's been neat to see that there's been a lot of movement, a lot more interest, and as you say, a lot more implied moves out there. But you really need some extra data to wade through all these stocks reporting, and we think we have a pretty good way to do that. So we've been happy about that. And like you said, there's still, we are into the 6th week of a 6-week season usually. But there's still some pretty major stocks that are coming out with the earnings announcements. Of course, we are looking at those. We've talked about this before. I mean, obviously, you pushed us into getting these reports together, but we have a way of looking at earnings that is important for people to consider. Is you look at a straddle is an easy way to look at how much the market thinks it's going to move. A stock is going to move up or down, and obviously those straddles get bigger and bigger as earnings announcement approaches. But you have to figure out what's going to be, how many days are going to be left in that expiration after earnings are announced, and what the residual or leftover straddle is going to be, because there's still days. And after earnings, some stocks move pretty busily. There's a lot of people still digesting the balance sheets and income statements of what really happened, and getting down into the nitty gritty of what was said on the conference call. So we have a way to really look at that, and estimate the residual straddle. You need to take that off of the straddle, and then you could say, okay, well, the straddle might be trading 6%, but it's really a 5% move that's expected because we think there's going to be a 1% straddle, and there are ways to figure that out with a distribution and some complicated math on where we think the implied volatility is going to be on the distribution. So, all those things put together, you need all these in order to start to figure out what's going on in earnings, and then try to find the one or two pearls that are going to move, or the ones that aren't going to move. And there are good ways to profit from those. Our good friend over at Market Taker, has talked about calendars, and we backtest a lot of those, and those look good. So that's how I'm thinking about the earnings season that is past, and the earnings still to come up. And really, I think, next earnings season, that's always a big one in January, Mark.
How dare you mention that jerk at Market Taker to me? That guy just can't stand that guy. It's bad enough to make me talk to him once a week. Don't bring him up here. I've escaped from here, Matt. You can't bring him up. But, this data is starting to get so popular, Matt. We might have to start expanding our purview. We might have to go beyond 6 weeks, 7 or 8 weeks. What do you think? Get all of the stragglers in there as well.
Yeah, I mean, we kind of just put them all into the 6 weeks since the numbers aren't that great, aren't that large. But, those are the fun ones, I think. You're like... Yeah,
there's some nuggets still to be found there.
Yeah, and I mean, there's so many that are coming at you during the season, and we continue to backtest our picks during the season, and we've done real well. We kind of every week we put the top picks on the top, bottom picks on the bottom, and see how the moves were versus what were expected. So, but as we kind of get to the end here, there are only a few left, and you still want some action. So the action still continues until the big January reports, Mark.
Yeah, the earnings season keeps on giving, and then, of course, right on into the next cycle, and it all kicks off again, listeners. So if you want to check it out for yourselves, of course, we have all that data for you over there, theoptionsinsider.com. Click on the Options News and Articles tab to begin your deep dive. And, of course, if you want to kick the tires on Matt's dashboard, then you know where to go, orats.com, ORATS.com, the place to go to kick the tires and light the fires as we keep going, listeners, and see if we can get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everyone, welcome to The Buzz, the portion of the show where we try to come to grips with the biggest stories and developments in the world of options. And one of the biggest ongoing stories, certainly since the onset of the pandemic, has been just how can this options tsunami continue? How can more people continue to discover and continue to start trading these products month after month and year after year? If you're listening to the show, listening to the network for a while, I was a little cynical coming out of 2020. I said, okay, that was a bit of an aberration. Everyone was at home. Trading became kind of the go-to sport with no other sports around, nothing else to do. You fired up your old TD app or whatever it was, and you traded some stocks and, again, some options. But that couldn't persist into 2021. Boy, was I proven wrong. 2021 came out like a lion with all the meme stock madness, and it never looked back. Blew the doors off 2020. And then after that, I had my cynicism beat out of me, and that was the right approach because 2022 turned out to be a banger year as well. And pretty much almost every month this year has been a banger, and sometimes surprisingly so. I don't think anyone had August, which is typically the dog days of summer, typically a seasonally quiet period for options trading. No one had that in their bingo card for banger months of the year, but August turned out to be one of the top ones. We have the numbers now for October, and of course, in a couple of days, because we're recording this in late November, we will have the numbers for November as well, so it'll be very fascinating to see how those stack up. Right now, we have the numbers for October from our friends over there at OCC, and October, once again, listeners, a pretty action-packed month, a banger, if you will. The new barometer we have in this post-pandemic era where everyone and their mother and their grandmother are trading options. The new barometer for a successful month is now the 1 billion contract threshold, which is the threshold we just surpassed for the first time this year. And it's already what people are looking for. Did we get there? Not quite in October, but man, we got close. 988.3 million contracts. It's only been, I think, 2 months this year where we've surpassed the 1B level. So this puts October in right there at the number 3 spot, not just of this year, but of all time. That shows you how busy this year is. If you're number 3 this year, you're pretty much number 3 of all time. That's how it works. This is just a crazy year from a volume perspective. So October, no slouch. A few interesting highlights. One of the ones that may surprise you, equity options actually down. One of the few dark spots on the bingo card here for October. Down almost 10%, about 9.1%. Everything else kind of blowing the doors off. ETF options up 25.6%. A lot of that on the heels of some single-day love, 0-day love out there in certain products out there. Index options, 32.5%. That's also feeling a lot of that love in that sector as well. I mean, 0-day SPX, people can't get enough of that, it seems like these days. So overall options volume up around 8.5%. Even the futures, listeners, even the futures, which are right now VIX futures, SIBO just announced that they're going to get back in the crypto game, so that's intriguing. Maybe something for John to ruminate on a little bit as well. But they're kicking those off in January, so pretty soon we'll be talking about clearing not just VIX futures volume, but once again, SIBO futures volume in the Bitcoin side after they got out of the game a few years back. So VIX futures volume up nearly 50%, 48%. That's been an intriguing one as well if you've been watching the volume numbers for a while. You know, VIX futures are one of the few dark spots, even during the boom days of the crazy 2021 meme stock and everything else was shooting to the moon. VIX futures were in the toilet. So even VIX futures were trading aggressively. So it was a banger month. John, I know you focus mostly on the digital side of the space. So if you have any thoughts there as well, we'd love to hear them in terms of crypto volume and what you're seeing out there from that front. But, you know, as an outside looking in at the option space, are you as surprised as those of us who are hanging out inside of it these days that the options numbers in terms of volume continue to deliver, continue to surprise even industry veterans, and new people continue to trade these things every month, sir?
Yeah, I don't think it's as surprising when you kind of look at what the demographics of, to your point, new people coming in and learning the space and trying to allocate money, right? And that could have been what I call the farm system, moving through some of these apps like a Robinhood and getting your first investments, rounding up pennies when you buy a coffee, and now you're investing those and over time accumulating some assets. And remember, that started about 5 to 7 years ago. And so now you have these investors who got in a lot earlier than most, right, who typically just come in investing in a 401k at their first company. You now have a new generation of folks that grew up with apps and investing from a very early age. And so I think as that education continues to be enhanced, we're going to continue to see more and more people starting to trade. And, is that a direct correlation to or causing the higher volumes? Probably not completely, but maybe contributing to a degree.
You know, I kind of joked about this earlier. We joked about this on our Crypto Rundown show as well, that magical 30K level for not just retail, but also institutional funds getting interest again in the crypto space. Do you see that correlation there as well, John, where when, let's say, Bitcoin, which is, of course, at the end of the day, the rising tide that lifts all boats, when Bitcoin ticks back over some psychologically important barrier, let's just say 30K for purposes of our example here today, does your phone start to ring off the hook? Do you start to see a commensurate uptick in volume on those levels as well? Is it just as simple as that at the end of the day, John?
Yeah, Mark, we could speculate on this for a long time. I mean, unfortunately, I do believe that there is a big element with Bitcoin price and people paying attention. And I think that on this particular, year, they had been beaten down. When I say they, advisors, investors, retail, you name it, have been beaten down with such negativity and bad press with all of the collapses of venture funds and FTX and fraud cases and SEC lawsuits. I think they just held it at arm's length. They thought it was over. They thought, why would I pay attention to this? It was clearly a scam, if you will, for lack of a better term. And I don't need to pay attention to it. And then fast forward, we start to see middle of the year, we're playing around that 30,000 range. And we're kind of holding that. We were bouncing off it for about a month or so. And then to your point, finally broke through it. And so I do believe that once we got north of that 30,000, people said, okay, well, maybe everything that was happening negatively has washed out, and we have found a new, ground, and fundamentals are improving and adoption is increasing. And now I'm seeing a lot of stronger narrative being built around the digital asset space as opposed to negative only. And look at the price. We're approaching 40,000. Like, okay, maybe I should start getting a little bit more in tune here because I don't want to be late, right? And so exactly to your point, I don't know if it was the 30,000 number, but people were paying attention. And now that it's moving in a positive direction, they're saying, I need to start ramping up my education because I have clients asking about it.
Mr. Matt, a lot going on in the world of the buzz. You and I have talked a lot about the options volume surge. It continued in October. We're all, of course, waiting with bated breath for the numbers for November, which we'll have in a couple of days. But really fascinating as well, a very new, a breaking development that it's worth squeezing in here on the buzz as we're coming up against it here on the show. You know, I was joking earlier about 0 day, but it does seem like that is just taking up all the oxygen in the room these days. Everyone wants more and more 0 day. Now NASDAQ looking to add to the fun, Matt, by expanding their offering to a bunch of ETFs, including a lot of the ones you may like, listeners out there tracking things like gold and silver and nat gas and a bunch of others. So, Matt, sounds like they're bringing the 0 day fun to more asset classes out of just your traditional S&P 500. I know you're a big 0 day guy, so A, how excited are you for this? And then B, when we're talking about these numbers in a month or two, how big of an impact do you think this is going to have?
Well, as I did when I found out about Bitcoin, I just had to trade a little bit of the 0 DTs just now. So let's hope we rally in the NDX, if you can believe it. I saw something on LinkedIn with our friend Sean Feeney and Ferrari talking about 0 DTEs finally coming to the NDX. I think it's going to be great for them. People are trading so much SPX. We have a lot of people coming to us for data, back testing, et cetera. So, this is exciting that now NDX has finally come to the party with their big index, $16,000 index now, and they're bringing it, Mark, with the 0 DTs. Yeah, I mean, and the overall volumes, 36% up for the indexes, and that a lot of that is the 0 DTE. Everyone's talking about it. It's been great, you could trade. There's a lot of strategies. We're starting to see our minute data used more and more. So it's been a boon for the industry, Mark.
Listeners, are you excited by 0 day options now, not just on NDX, but of course, expanding the purview, some of the popular ETFs you trade options on now, maybe your GLDs and your SLVs and everything else could suddenly have some 0 day fun to come. A lot to keep an eye on as we look forward to future episodes. All right. That music means we have come to the end. Man, time flies when you're talking about 0 day and about crypto assets and everything else out there. We had a fun time. Hope you had a fun time joining us on the Advisors option this week. But before we go, John, you did a great job in the old guest hot seat. One more time before we roll out of here. If folks are intrigued by everything you were talking about today and they want to learn more, where should they go? What should they do?
Yeah, we'll keep it simple. And Mark, I really appreciated the time and great questions. And Matt, nice meeting you. GlobalXETFs.com. Depending on where you are throughout the country or world, we do have representatives living in those respective regions, and a lot of the contact and map information is there. So GlobalXETFs.com, and feel free to reach out, and we'll make sure to help you out here.
There you go. Check them out, globalxetfs.com, the place to go to learn more. You can give them a follow on Twitter as well, at globalxetfs, all one word. And Mr. Matt, if folks want to play around with your dashboard, maybe say hello to Otto, where should they go? What should they do?
Yeah, orats.com. We're actually pushing out a production update tonight. You're going to see we have this largest trades in the market, and we're going to see all the largest trades per stock. Of course, we have our backtester there with 60 million backtests that you could sort through, and then now we have the ability to edit those and put a custom backtest in. And so there's a lot going on, Mark, and we have our plans for 2024 are going to be insane. So we're quite happy with the way things are going. Go over to orats.com. and kick the tires.
Mr. Matt, I smell some tomfoolery because our flash poll, I just checked on it. It has now swung to 50-50. I think Otto has been playing around there. What's going on?
We have 16 computers here, and Otto's on 14 of them.
Otto saw that, and he did not appreciate you being besmirched And so he went, so yeah, right now it is exactly 50-50 in our flash poll. So half of our audience apparently agrees with you, Matt. 3,000 before 5,000. That'll expire soon. So if you're listening to the podcast, probably too late. That's why you got to be following us at Options over there. We do a lot of fun stuff, not just silly flash polls, but those are fun too. Over there at Options is the place to go. And you know what? You don't have to go anywhere if you're listening to the Pro. Just hang out in the live. We'll be back in a little bit with another great Pro Q&A session. I'll be joined by Mr. Rich Excel, tackling all your questions about futures options, volatility products, regular option strategies, and a whole bunch more. Should be a good one. Back again tomorrow with that aforementioned market taker guy doing a little bit of the old options boot camp. Back on Thursday, of course, for our double dose of the option block, as well as This Week in Futures Options. Friday, volatility views, and for all our pro folks, we're back again for Options Oddities. Then we're back again in the final month of the year. Hard to believe we're already rolling into December for another episode of the Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.